Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Lobo Tiggre of the Independent Speculator. Lobo, great to see you again.
Well, I'm glad you think it's great to have Darth Silver back on the show.
Awesome. Well, it's always nice to have Darth Silver back on the show. Lobo, you said in a recent interview you own more silver right now than you ever have in your life. So, from what you are seeing, is silver divorcing itself from gold or no?
Well, those are separate questions, and I'm raising my eyebrows. I think I said I have more bullion combined, and I'd have to actually go back and try to do the math because I had a bigger actual stack of silver coins before, but a lot of that was Mexican pesos from the 50s and 60s that were only partially silver. They weren't actual silver pesos.
Mm-hmm.
I've told the story before about how I had a financial meltdown, and I sold my childhood coin collection and fed my family. I literally went from the pawn shop to the grocery store in Cuernavaca, Mexico. I literally had no money. I was stuck in Mexico. A long story. A trip got derailed, and I had my kids with me, a Winnebago full of kids, and no money. And so I sold my childhood coin collection, which had these old silver pesos that had a smidgen of silver in them, and I got 1 peso for them. But I'm trying to be honest here and say, I had a bigger stack then, and I don't know how much silver was in it. I don't know how to do that math, and I'm not certain that my silver now, but it's a lot. I mean, the ones now, it's silver wolves from Canada and silver eagles.
Is now when you refer to silver pesos, is that the Mexican version of what we call junk silver, like
Yes,
the old 64 quarters
precisely.
and
Yes.
pre-64? Gotcha. So you said in a recent interview, silver will never be used as money again, and I get it. That was probably a headline, but what's the gist of the story behind that?
The argument is that silver, I mean, there is data that says that silver's role is changing. As you and I speak right now, or as we speak right now, gold is up this afternoon and silver is down. And we've seen this over the last year a great deal. And that's really the data point to drive home, is that the correlation between gold and silver prices over the last year has dropped almost nothing, like 0.2 the last time I ran the numbers. And that's almost no relationship at all. So this isn't just me being Darth Silver. This is what the data says, that there's a difference here in the marketplace. Now, why might that be? Well, industrial aspect is coming on strong. There's all this talk about the photovoltaic, not just talk, I mean, it's a fact. Industrial demand for silver is more than investment demand. It has been for a long time, and it's growing. So there's a fair amount of logic to that. But the question, though, is about silver as money in circulation. And part of the answer is that with digital forms of ownership of assets and transference of assets, we may never actually have any coinage back in circulation at all. Like, people don't even want to carry paper in their wallet. Who wants to go around with a medieval coin purse full of gold, silver, copper, or whatever?
Yeah.
It's you put your phone there, your card there, maybe biometrics in the future. You won't have to carry anything. You just walk in the store, pick up stuff, walk out, and it charges you. Who's going to want to carry a coin purse? We may not have any coins, but if we did, if the world were to go back to a gold standard, my argument is that it may will not, but may not adopt a bimetallic or a trimetallic standard such as we've had in the past. You needed silver to make change for gold, and even copper to make change for silver, because you weren't going to go down to the store and buy a loaf of bread with even the smallest gold coin you could get. Yeah. Now, with digital ownership of these assets, it's possible to divide that infinitely. And so, do you need silver to make change for gold? You can buy things with a 0.001 grams of gold or whatever it is. And it would complicate commerce a lot if you did have prices in 3 different metals. Before, a penny was worth exactly this much of a dollar, a quarter was worth exactly this much of a dollar. And so they were fixed, and you could have one price that worked. But in today's world, where the prices of copper and silver and gold fluctuate against goods, against each other, if you had to go in the store and you had one price for if you were paying with copper, and another price if you were paying with silver, and another price if you were paying with gold, it would be really messy. So all I'm saying is that there's an argument to be made that even if the world goes back on a gold standard, we may never see coinage again. And if we do, it might be monometallic. Now, I'm not talking Mad Max scenarios. I get that if the internet's down, all the digital stuff goes down, and that's one reason why I'm not selling my stack. If heck comes in, world goes to heck in a handbasket, I certainly want to have silver, copper, and gold. But I'm just thinking about, in absent the end of the world, if there was even a new gold standard, I don't know that in the modern times that there actually needs to be any silver in circulation.
I'm sort of on the same page with you, because I've been making that argument, and Keith Neumeyer sort of convinced me of it, that all of the there's not even remotely enough silver to keep up with demand in around the time frame of 2025 to 2030. He's of the belief, and I agree, that industrial demand is going to consume 100% of what's coming out of the mines. At that point, there's going to be nothing left over for investors like us. And you could even see the mints no longer being able to produce the coinage that we buy right now.
Let me jump in and earn my Darth mantle of whatever stripe you want to paint it, and say I'm not sure I'm going to agree with that. And it's not that I'm saying there's too much silver or whatever, but remember that most silver is a byproduct, and most so-called silver mines are really lead zinc mines with big silver credits. And the biggest single source is the gigantic copper porphyries that have all this silver in them. That is such a small part of the porphyry, but it's such a big deposit that it is a very large supply. And then why that matters is that, part of the context, which is bullish silver, by the way, too, is on this industrial context of the electrification of the world and how much copper is going to be needed. Like the giant new copper mine that Friedland just brought online in Africa, we need like 6 of these every year. So I remember the numbers. I haven't crunched them myself, but I've seen these numbers about how much copper we're going to need. So there's going to be massive investment with copper, multi-decade trend that I think is actually very bullish for copper, and that is going to supply more silver. So I'm a little bit skeptical of the argument that we're going to run out of silver. It's all going to be there, because there is more supply coming too.
I agree. There's always new supply coming online, but would you agree also that the ore quality is generally becoming worse and worse, and the mines are the theory, or I think the fact is, all the big easy silver mines were found decades ago and are mostly depleted, and the replacement mines that are providing the silver now are no longer primary mines. It's more often byproduct, as you just said. But even in the byproducts for copper, and like you just said, we need 6 of those types of huge copper mines coming on. They're just not there, though. It's the bigger mines are being replaced generally by smaller mines with lower ore quality. So that doesn't mean run out of silver or run out of copper or run out of any of these metals. It means they're going to be more expensive. We're generally on the downside of the bell curve for some of these elements, some of these metals. Right. And at some point on the downside of the bell curve for silver, but at the same time, the demand consumption side is still rising because of electric vehicles. I get it. For solar. At some point,
that's part of my generally bullish thesis, Jim. I do get that. But it's not that the mines aren't there. It's I think the permitting and the NIMBY attitude. There are a lot of very large copper deposits that are known in the world, and a lot of them are copper gold, with that silver lining. And you just can't build them. They're being tested. There are a lot of big ones in Peru, for example, and Peru just took a hard left turn, and there's protests and things. That's a real supply issue. But it's talking about the multi-decade trend. Let me say, I'm in general agreement with the thesis. I have a hard time with the absolute statements. Like there won't be enough silver, or there aren't enough mines. I mean, they're there, and at the right prices, these things move around. And
but it's 10 years. It's 5 to 10 years to bring them online. Correct? Yeah. I'm sorry to interrupt you. I'm just like that.
No, I get it, and it's okay to have pushback. I think, Keith has his model. JP Morgan has their model. CPM Group has their model.
They're not in the silver market. They're just observers. They're not.
I'm just saying it has their model. It rests on various assumptions. And okay, let me put it this way, without throwing Keith or anybody else under the bus.
You can throw Jeff Christian under the bus. That's okay.
If I want to have a projection for the silver market, I want to ask somebody who doesn't have a horse in that race.
Okay.
You know, I don't ask any silver CEOs where they think the silver price is going. I don't ask a copper guy where he thinks the copper price is going. I'll ask somebody else
To the moon.
who doesn't have a market price. But the general thesis of, you know, having to go for lower grade because the easy pickings have been done, you know, clearly that's true. But when people say there's no more silver, that's not true.
No one's saying that, and I can point to several mines coming online that
exactly
that are going to be primary silver. I think the argument, the general argument being made, I'm not saying it's zero silver, and I don't believe anyone who says that either. I think the general argument is the bell curve's in decline and unlikely to. I think it's unlikely we will ever get back up to the.
Well, but there you go. You just said ever. Ever is a long time, my friend.
Okay, the 2015 peak of they produced, all the mines globally combined produced about 900 million ounces.
Mm-hmm.
Last year, which was obviously COVID affected, was 750 million ounces. It'll probably bounce back up to 800 million or so this year, once it's all done and counted. But the general trend is still in place from 2015 of slight declines over time. And the general trend of consumption, industrial demand, industrial consumption is also steadily headed upwards. And at some point, those two things cross. And then the question becomes, who doesn't get their silver? Or someone gets squeezed out of that market.
Or do high prices cure high prices? You know, we've known from the past, we've seen cases. I am bullish, don't get me wrong, Jim, but we've seen from the past when silver prices, you know, hit $50 and people get all excited, they start melting down grandma's silverware. Yeah. Like right now, the last chart I saw shows about 18 to 20% of silver offtake now is for investment purposes, right? The bars and coins and so on. Mm-hmm. That's a lot, and that's just 1 year. So it's you know, there is silver that is, you know, taken off the market that is recoverable at certain prices. So as those lines cross, like you say, you know, maybe at that point people start selling again. And, you know, an example right now is what's happening in the uranium space. You have the Sprott thing pushing uranium prices crazy, and people are like, oh, it's going to the moon, and it's going to take years for new mine supply to come on. It's going straight up to $150 or whatever. Well, guess what? It hits $50, and suddenly there are new sellers on the market, and you know, it goes into reverse. Now, I'm not bearish on uranium either, but I'm looking at the facts, Jim. I'm looking at the data, right? High prices brought new sellers to the market, and that could happen in silver too.
Well, that leads to the next question I was going to have. In a recent interview, you said uranium, don't chase the hype, and you know, follow up on that. What's the hype? And I'm not in any uranium stocks. I got no horse in that race. But what's going on in uranium right now? Ahead of itself? I
think it's good that you bring that up, and I think it's not just a digression into uranium. I think it's relevant to silver investors because the Sprott Physical Uranium Trust, just like PSLV, was launched, and it took uranium off the market, and it turned out, lo and behold, that there really wasn't that much cheap uranium in the spot market. Spot prices went from $30 to $50, a really parabolic move. And so everybody's all excited. The uranium bulls were, you know, wow, here it is. We're off to the races. And, you know, here comes Darth Silver changing to Darth Uranium. And I didn't poo-poo it. I didn't say, don't buy uranium or hate. I'm a uranium bull. But I said, guys, you know, the idea is buy low, sell high. Yeah. And, you know, uranium at $50, you know, that's not low compared to where we've been. And there's nothing wrong with taking some profits. And by the way, taking profits, people, oh, you're talking about selling. No, taking profits doesn't mean sell everything, get out. It can mean simply recover your initial investment or get a little risk off the table. To take profits doesn't mean you've given up on the investment thesis. It means you recognizing gains in hand, right? You know, gains in hand are not real until they're realized. So boy, did I get I think I got as much hate from uranium bulls when I said, you know, when uranium's going up to $50, that taking little profits isn't a bad idea, as I got on your first show where I earned the Darth Silver mantle, or, oh no, you know, you're a denier.
I mean, I'm
just trying to look at the data. Sorry, just real quick to wrap it up. I think this is very instructive, okay? High prices, even in your most favorite metal, can cure high prices, and that's worth remembering. And it's worth remembering that markets fluctuate, buy low, sell high. And I'm a bull on both metals. I just think that if I'm disciplined about it and I wait for these fluctuations, I'm a much happier to buy silver now in the low 20s than I was in the 30s. And I'm much happier to buy uranium or uranium stocks, not the metal, obviously, in the low 40s than I was in the 50s.
The next, hey, we're doing the whole periodic table today. Copper versus uranium for the next decade. I heard in a recent interview you were very optimistic about copper's outlook versus uranium. You copper over uranium.
Yeah, we've kind of touched on this already. For longer term, absolutely no question, copper trounces uranium. Uranium it's kind of like silver in that it's a byproduct. You have these big IOCG deposits like Olympic Dam. They couldn't care less. Well, maybe couldn't care less, but the uranium is pretty unimportant to them in terms of their cash flow, and they're going to supply that uranium whatever the price of uranium is. Mm-hmm. And there's idle capacity with the uranium. You've got a situation that's OPEC-like, where you have the biggest and lowest cost producers that are not producing all the uranium they can. So that's not a multi-decade, supply constraint. Those guys have to be rethinking their production decisions now. Those guys can make money now, even if the little guys with their projects designed at $60, $70 can't. Those guys can't. So I'm very bullish on uranium, but my thesis there is very near to midterm, like 1 to 2 years. And if we get a supply squeeze and the price does go to triple digits, great, but don't let them slip through your fingers. Make sure you lock in those wins. Whereas copper, it'll go up and down. If there's another COVID variant or there's a stock market crash because of the tapering or whatever, that will hit copper, but it doesn't change those fundamentals. And, whether governments, people want to push back and say, oh, well, the government shouldn't be mandating electric cars. Well, they are, whether they shouldn't, they are. And that's not going to change anytime soon. So I see copper as a very robust and enduring bullish thesis for decades.
Gotcha. I want to change the subject now. Let me do a share screen. The recent, one of the things I watch is the Atlanta Fed's GDP Now numbers, and Happy Hawaiian shared this the other day. This is the estimates for Q3 GDP, and it's come down dramatically in recent weeks. And we don't even have the GDP number now, but what they're estimating the numbers will be, it was 6%, 2 months ago. It came down to 2.3% last week, and now it's just crashed down to 1.3%. And this is as they get more and more data about what happened in the most recent 3 months that have already ended. If this goes down another notch or two before we get our GDP number, we might already be in recession. I mean, and number one, that wouldn't surprise me with all the news out there. But what's your reaction to this dramatic slowdown in GDP numbers? And once again, this is not the GDP number. It's their projection for what it's going to be.
And people are seeing me laughing, and I'm not laughing at the misfortune of the people who are obviously affected negatively and that impact showing up. But I'm laughing at the projections, and I'm laughing at the powers that be. And at the same time that they were telling us how transitory inflation was going to be, which originally was just a couple months from base effects after the crash of last year, at the same time they were talking about transitory inflation, they were talking about the V-shaped recovery. And, it was artificial, wasn't a real recession. We just shut things down. We'll just turn the switch back on again. Everything will be fine. And those numbers that you're talking about are calling BS on that. No, you can't just shut down the engine of the world and turn it back on again like a light switch, and nothing bad's going to happen. Nothing's going to break. I mean, I remember writing about this at the time, and about unknown things breaking in the dark was the way I put it. You shut off the lights, who knows what the knock-on consequences are going to be, but we know there will be some. And we're seeing that now in the supply chains. And the funny thing is now, before transitory was, well, it was the base effects. Well, now that's not the case. So then transitory was, well, it'll be until September when the kids go back to school and people can go back to work. No. Well, now the transitory is because these supply chain things are temporary and those will go away. But well, maybe sometime in 2022. So that transitory story, they keep moving the goalpost and smearing that up. The V-shaped recovery, that's gone away. And then, it became the square root recovery. It was going down and come back up again, and we'll be okay, and we'll get it better from there. But what if we're not okay? What about all those things that broke in the dark when you turned off the lights and nobody even knows? Mm-hmm. The global economy, such a big, complicated thing, and things start disconnecting and breaking. I am not surprised by that at all. I can't say I predicted that, but I've been extremely skeptical of V-shaped recovery. And I have said for some time that on the square root, it remains to be seen how far below pre-pandemic level that square root is and how enduring that is. But here's the takeaway, Jim. And here's, I think, where if any of the 2 or 3 silver fans left out there who are still listening, we'll take some hope here.
There's about 10,000 will see this video, so don't worry.
We've got the transitory nonsense and we've got the V-shaped recovery nonsense. And when that noise cancels itself out, what you have is a weak economy and high inflation, and that's stagflation. And that's very good for monetary metals, which still includes silver. Remember that my thesis is that over the years, silver may become, more purely, its price may more purely be defined by its industrial use. And the coinage question is for some time in the future, if there's even a gold standard. Right now, silver still trades as a monetary metal. I see it that way, as a monetary metal. And I see this double nonsense, in the stagflationary environment that's shaping up. I see it as very bullish for both monetary metals, not precious metals, monetary metals, gold and silver.
It sounds like, this is something that Peter Schiff just tweeted out recently. It sounds like you're on the same page, with the growth estimates decelerating quickly. I think he said it started as in June, the forecast for Q3 was as high as 7%. Now it's down to 1.3%. But at the same time, consumer prices are, they're admitting to 5%. It's probably higher than what they admit to. That's stagflation. That's the definition of stagflation. Welcome to the 70s. And,
right.
He's thinking taper. I don't know. They keep talking the taper game. I don't see how they do it. I mean, it seems like that would be.
Well, they might. And no, I agree with my fellow Puerto Rican there. And I think the writing is fairly obvious for anybody that doesn't have an axe to grind. I mean, the data is pretty compelling. Mm-hmm. And, there are, to be fair, there are reasons to separate the 70s from now. It is not the 70s. And you had gold coming off of a price control at the beginning of the 70s. Mm-hmm. And that's not the case now. What's happening now is not the same as what Tricky Dick Nixon did in August of 1971. So I'll stand by that,
Yeah.
But there is economic weakness. And I know it's a very boring number that few people like to look at, but one that I think is really important is the labor force participation. And I suspect the audience is probably all 2 or 3 of them that are still there with me on this, that the employment numbers are very politically massaged, adjusted and so on. They're not real. Even Powell says that the real unemployment number is twice, what the official rate is. Mm-hmm. So if even Powell's going to say that, the real number has to be sort of a John Williams-y sort of number. But my point is that the labor force participation rate is down, again, square root. There was a knee-jerk or a rebound, but it's been going sideways. It's still at the same level that it was in August of 2020. It's gone nowhere since then. And at a level that we haven't seen since the mid 1970s. So there you go. There's your 70s parallel.
Yeah.
But back in the 70s, you had plenty of families that could get along just fine on one income. And that's not the case anymore. So, I think that's a big deal. And whatever numbers they put up there about how great everything is, until labor force participation comes back, I just call BS on the so-called recovery.
Well, the other difference between the 70s and now, and I think this is the biggest, we had debt to GDP of only 30 to 35% back in the late 70s when Paul Volcker was able to kill inflation by raising interest rates to 20% and kill the, whatever it was, 12, 14% inflation that was happening. But now, we are at 140% debt to GDP and climbing to 150. It's like the concept of let's say inflation's just the 5% that they admit to. I'll give them. I'll just give them that. To stop inflation, you got to raise short-term rates above the inflation rate. All right. Can anyone imagine Fed funds rates at 8% and your mortgages at 12%? I mean, could you even imagine that scenario right now? The implosion in everything that would cause?
I agree. That is a huge difference, and it's critical. And we're not the only ones saying this. Other people have pointed out that the powers that be need rates to stay low. They can't. I mean, the national debt is one thing, but just the budget, and it's not doable. There's not enough income without pure money printing if interest rates go higher. And by the way, even if interest rates are, even if inflation is just where they're saying right now at 5%, in 10 years, $100 becomes about $60. And just at 5%. And in 20 years, it becomes around $35, $36. But let's say it's where, symmetrically above at 3.5%. In 10 years, $100 becomes $70. In 20 years, it becomes $49. But let's say it goes back to 2%. Like this is our goal, nirvana. Oh, 2% inflation is wonderful. It's not wonderful. It's bad. In 10 years, your $100 becomes $81.
Yeah.
And in 20 years, it becomes 66. Inflation is bad. This whole idea of, we want good, it's not true. It is a lie. It's a deception. Inflation is a loss of value, pure and simple.
Yeah, it's a tax on the poor because the wealthy, who have assets.
It is, and it does fall disproportionately on the poor.
Yeah, the people who have assets typically can have assets that, whether it's real estate or whatever, that generally protect themselves from inflation. And people who are just stuck on a modest income are they're losing buying power without having the asset appreciation to make up for it. Ivan, any final questions?
No, Lobo, I just want to thank you so much for coming to the channel. We probably won't invite you again. No, I'm just kidding. I'm just kidding.
We'll take a vote in the comments and see.
No, I'm kidding, Lobo. It was a pleasure.
Now we'll have you back, of course, in 2 or 3 months, just to see how things develop, and you can tell us you told us so. And we appreciate you coming on and chatting, sir. Thank you very much.
Well, wait. Remember, I said, in terms of I told you so, remember, I said I like buying much more at low 20s silver than I did 30. So I told you, so it would actually be that silver's gone up.
So are you, well, where are we right now? We're in the mid 22 area. Is now buy the dip moment? Are we bottoming now? You want to give us your call?
Yeah, I'm not, me, I'm not one for predictions. I will say that I have 2 stocks on my shopping list right now. Neither is a gold stock. One's a uranium stock, one's a silver stock. So I'm looking to put my money where my keyboard is or my mouth as we're talking on both of these things where I said, don't buy high, buy low. What I'm looking to do right now.
All right. Well, on that note, thank you very much, sir. We appreciate it.
Thank you.